Well, it's a jam-packed show. So moving from one corporate voice to another, we've got Satyanarayan Goel, who is joining in. He's the CEO and MD at IEX, or India Energy Exchange. Thank you so much for taking time out. To begin with, let's just talk about the overall volume growth at about 32% CAGR since the company's inception. Do you think it's possible to sustain this kind of a run rate, or are we going to see the base effect come into play? And what is the outlook when it comes to your volumes?
Good morning. Our CAGR for the last 10 years has been is almost about 30% plus. But if you see last two years we have grown at a rate of almost about 37 to 40%. And it is mainly because economic activities are reviving now. Our GDP is growing. Power demand in the country is growing. And also there is a lot of focus by the regulator and the government. A lot of policy and regulatory initiatives are being taken to develop the market in the country now. And because of all that, the volumes are growing. And I'm sure in future also, these activities will continue. We continue to provide a robust technology platform to our participants. And we do a lot of new product innovations, bringing new product for the market participants. And because of that, we are seeing continuously larger participation by our participants and volume growth.
Okay, fair enough. And, what about the overall outlook in terms of, the company was waiting for an approval to launch the long duration contracts, or LDC, that complies fortnightly, quarterly, monthly and yearly contracts. This, of course, has the potential to scale up your volumes quite tremendously. What is the update on this front?
Yeah, I mean, we have been, as I told you, we have been launching new products. Last year, we introduced real-time market, green day-ahead market, green term-ahead market, and this year again we introduced cross-border transactions. Because of these new products, we are seeing good volume growth, and keeping this in view, we have also applied now for the long duration contracts. Today we are allowed to trade only up to 11 days. Now under the long duration contracts, we will be trading in contracts up to 1 year. And in this particular segment, there is a good volume growth opportunity for us. The market size is almost about 40 billion units. So let's see, when we are expecting the regulatory approval in the next 2 months' time. And when that happens, this will provide us a good volume growth in the future.
Right. So when we just talk about the volume growth, can you just tell us how has it changed over the last 5-7 years? How have things become much better? And, it will only add on from here because of the sort of environment that we are there in, especially on the macro side.
Yeah, the volume growth in the last 2-3 years particularly is driven by the introduction of new products and also because of the regulatory and policy framework which is evolving now. And because of the renewable happening in a big way in the country, which has a large variability. So government has now realized that it is necessary to deepen the short-term market in the country. Because if you want to integrate the renewable with the mainstream, and the larger the liquidity in the short-term market is very necessary. And a lot of initiatives are being taken by the government. Very recently, they have started the green market, and last year we did almost about 5% of our volume in the green market. In the future, I'm sure this market is going to grow at a much faster rate. And government is also now coming out with the new network access rules, which is more market friendly. And I'm sure this ambit, GNA, ancillary market, capacity market, all these things are being discussed now. So with these things, we should be able to maintain the growth, what we have achieved in the last 2-3 years.
So the recently launched, real-time electricity market, green time ahead market, what has been the response? Have they seen some great volume pickup?
Yeah, real-time market, particularly which we launched last year, is almost about 20% of our total volume now. And in this market, we are seeing a good participation. Green market, of course, it is only about 5% of our total volume. But then volumes are picking up in this market. And we are doing policy advocacy with the government also to ensure that IPPs are able to set up capacity for selling the market, and the rule of the game should be more market friendly. There's a lot of interest from the IVPs also to set up capacity on merchant basis, and I'm sure in the next 1 or 2 years, this green market will have larger volume growth.
And given that you're optimistic about your overall volume growth picking up, the new products as well, where do you see your margins headed?
We are today almost about 85% EBITDA margin, and I'm sure the margins will continue to improve further because in exchange business, the cost increase is negligible. So with the volume increase, the margins will further improve.
Okay, and give us a sense as to what the outlook is in terms of your capex plans going forward. How much have you set aside, and what will it be utilized toward?
Yeah, I mean, last year we had set up a gas exchange, Indian gas exchange. So there we did some capex in that, and that also is doing good business now. And we are also looking at a couple of more diversification initiatives. So as such, in the exchange, in the Indian Energy Exchange, there is not significant capex requirement, and the capex, whatever is required, our profits are enough to take care of that.